Hey, this is Daryl Henry with Insurance for Entrepreneurs, and today I'm answering a question I get all the time. How much does directors and officers liability insurance cost? And whether you're running a startup, small business, or a nonprofit, this is an important policy. But what should you expect to pay? And what factors impact the price? Let's break it down. So let's start with the short answer. For most small to mid sized businesses and nonprofits, directors and officers insurance costs between $600 to $2,500 a year. That's usually for a standard $1 million coverage limit. Now, if you're a startup raising venture capital or a nonprofit with a large board, you might be looking at a higher range. It could be 3,000 or 5,000 or even more depending on your size, structure, and your risk profile. The good news? For many organizations, directors and officers insurance is surprisingly affordable, especially compared to the cost of even one legal claim. That's what you got to keep in mind. Attorneys are really expensive. They cost $500 to $700 an hour. It's easier to pay for insurance. So, what determines the price? Here are key factors that insurance companies look at when quoting directors and officers liability insurance. One, company type. Are you a nonprofit? Are you a private company or are you publicly traded? If you're a public company, you're going to pay more because there's more owners, there's more scrutiny over your financials, and there's more people that have a financial stake in what you do. Nonprofits and private companies, it's usually a lot less. Revenue size. Larger companies are going to pay more because they have more exposure. And if you have more employees, there's more of a management risk. So revenue and size is very important. Three, the industry you're in is going to influence how much you pay. A tech startup with investors is going to be different than a small retail business or a real estate company or a small nonprofit. But industries that are highly regulated, like financial or biotech, or if you're a politically driven organization, you're probably going to pay more because there's a higher risk, there's higher scrutiny on your leaders and what they're doing to steer your organization and how they're using the money. Claims history is going to matter. If you've had prior lawsuits or legal issues, you've got to expect to pay more. I worked with one organization that had a fallout with their first leadership team and paid out a lot of money to make that leadership team go away. And the cost of their directors and officers insurance doubled after the insurance company found out about that claim. So it matters a lot. Corporate governance. Do you have strong internal controls? Do you have a written code of conduct? Do you have clean financials and good board practices that can lower your cost? Look, insurance companies look a lot at your financials when underwriting directors and officers liability insurance. If you're operating at a loss, that's a huge morale risk within your organization. You're going to end up paying more because there's a higher risk that something's going to go wrong. Insurance companies know that companies that are losing money, they cut corners, they do things to try and get profitable, and it's not always good decisions. So you got to have good, good, clean financials. So six, coverage limits. The higher coverage limit you choose, the more you're going to pay. If you want a $2 million limit or a $5 million limit, that's going to cost more than $1 million. And you'll also choose a retention, which is like a deductible. And if you choose a higher retention, it's going to cost less. If you want a lower retention, you're going to pay more. So let's look at a couple quick examples. A Maryland nonprofit, 5 board members, 400K in annual donations, no employees, clean financials. They're probably going to pay about $800 a year for $1 million in coverage. A tech startup in Baltimore, seed funded, 10 employees, raising Series A, investor in employment related risk. They're going to be paying about $2,500 to $4,000 a year. Example 3, a small business in Maryland, privately held with 20 employees and wants protection for its leadership team, probably between $1,000 and $2,000. And so these are just examples, but they show how wide the range can be and why it's important to get a quote specific for your organization. Now keep this in mind. Directors and officers insurance isn't just about cost, it's about protection. Even one legal claim can cost tens or hundreds of thousands of dollars in defense fees. Attorneys are expensive. Directors and officers insurance can help protect the personal assets of your executives and board members so they can lead with confidence without fear of personal lawsuits. And for what you pay in a year, it's usually less than what a single attorney charges in a week or even 2 hours, really. So, how much does directors and officers insurance cost? Anywhere from 600 to a few $1,000s per year, depending on your business. It all comes down to size, structure, and risk. If you're ready for a personalized assessment and you want to see what it would cost for your organization, please just reach out to me at insuranceforentrepreneurs.net. My contact information is there. As always, thank you so much for watching. If it was helpful, please hit like and subscribe. It helps other people like you find the channel. And as always, go build something great.